All right, guys, bang, bang. I've got Ryan here. Thanks so much for doing this, man.
Yeah, thanks, man. I'm really excited to be here. How you doing?
I'm doing fantastic. For those that don't know you, let's just jump right into your background. You've done a bunch of awesome stuff, built some pretty large companies. Maybe just talk about like where'd you grow up and then kind of how did you get into the business world?
Yeah, so I'm from the DC Metro. I'm from Maryland, and I went to school at Northwestern in the Midwest near Chicago, and then I went through the whole like banking route. Did the J.P. Morgan, Lehman Brothers, worked at Deutsche Bank during school, took a full time job at Deutsche out of school, did the investment banking thing for a short while, and then I went to the Carlyle Group, moved back to DC, worked in Carlyle's U.S. real estate fund when it had about a $3 billion fund in 2006, and did a whole bunch of deals there. I was learning a tremendous amount, and then while I was there, I started doing real estate deals for my own account on the side, and I was reading this newsletter called BizNow, BISNOW, which is this father and son duo had co-founded Mark and LA BizNow in DC. And I essentially cold approached them and asked them if I could buy a big chunk of the company. And I ended up doing that and becoming CEO of that company. And spent 7.5 years scaling that company from which was newsletters, an email newsletter for every metro market that we were in. So we had 28 metro markets eventually, with a reporter in each one, kind of like Imagine Business Insider for commercial real estate. And we made a bunch of our money was really made on conferences and advertising. And we scaled that to about 300 conferences a year and about 7 million in profit, a little over 20 million top line, and sold it to a private equity firm in 2016. I replaced myself with kind of like my protege, if you will, who became CEO of the company, and he's still there. And so at the same time, though, in 2008, Elliot Bisnow and I co-founded this company with a few other friends called Summit or Summit Series, which is basically like this kind of community or gathering for all kinds of people, like founders of companies, nonprofit leaders, activists, academics, athletes, anybody who's a leader in some sort of space. And we would gather them for these like really like immersive events that were made up of wellness and talks and art installations, kind of like Burning Man meets TED. Some people kind of refer to it. And eventually that became thousands of people gathering at a time. They'd buy a ticket that's like anywhere from $4,000, $5,000 on average, and we'd have all kinds of amazing speakers and personalities there. We've had Bezos and Branson and Shonda Rhimes and Jessica Alba and Reed Hastings from Netflix, Ted Turner, Brene Brown, Al Gore, all kinds of really interesting people who would come and inspire the community, and many of them were part of the community. And then in 2012, we bought a 10,000 acre ski resort. It's actually the largest ski resort by acreage in the US, in Utah, a ski resort called Powder Mountain, which is actually where I'm at right now. It's absolutely beautiful here right now. And it's about a 7 lift, 4 restaurant, 10,000 acre ski resort. And we've been essentially become developers of the resort. So we're building roads, we're building utilities, we're building lodges, and hosting our events here, and building this community here. Like it's still open to the public, but there's also an element to the community that's like a membership as well. And so we've sold about $150 million worth of real estate here since 2012, and it's been kind of an interesting way to think about extending a media brand or a community brand into a real estate project. We started a $30 million venture fund at one point called Summit Action, which invests in startups, and started a nonprofit called the Summit Institute, which is a 501c3. And I still do real estate investing, and my main focus these days actually is trying to buy small companies. And we're actually, a friend of mine, helping him close on a company next week. So yeah, it's been kind of a crazy adventure.
So you not only have built multiple companies, you've also done everything from media to software to real estate to kind of community building, and you've just got a lot of what I'll call kind of practical experience and expertise. So throughout this conversation, I think we'll kind of talk through a lot of just like the lessons you've learned from the operator seat. But maybe talk a little bit. Let's go back to Biz Now and talk a little bit about like tactically. Once you bought the business, what was kind of the state of the business, and what did you do to actually grow it to a $20+ million top line, $7 million in profit? Like, what were those steps that you took, and why did you do that?
Yeah. So, the idea was to build like a mini conglomerate of sorts. Like I was looking for a cash flow positive company, and then I would take the cash flow and invest it in real estate. That was my original thesis. I underestimated how busy I would become running BizNow. And so I frankly ended up, just becoming like kind of more of a passive real estate investor than doing as many deals as I thought I would on my own. But the way that, we scaled that was by market. So, I'd go to New York and crash couches with friends and hire our first writer. And then I would make the first sales myself, selling advertising, and get it up to break even. And, one thing that we would do is whenever I'd go to a new market, I would go to all of the top firms in the space and say, look, we're only going to have one law firm own all of our advertising for a year. And we're only going to have one accounting firm and one, lender. And I'm talking to 5 of you, and one of you is going to get it. And I'm going to give you a big discount, and I'm going to give you all the ad inventory for a year in your exclusive category. And that really worked well. Like I could get, the first 5, 6 key stakeholders, and then that would basically pay for the writer, and pay for me to hire a salesperson, and would pay for some of our overhead for a year. And I just basically did that market by market. And the thing I thought was kind of cool about that is we never took any outside capital. So we ended up owning a lot more of the company than, your typical kind of growth company or startup, through this kind of like profitable sales method. And then, once we got, maybe, I don't know, 5 to 10,000 subscribers in a market, we would start producing our own conferences. And the conferences would bring in ticket sales through our website. And our sales team that was selling the ads would sell the sponsorships to it. And we would do an event pretty much every month in every market, and eventually even as much as like 3 events per month per market. And we became, obsessed with data. How could we have the most data on our audience so that we could deliver an event on hotel development in Brooklyn and have 400 people show up when the competitors at best could have maybe 200 people show up for a hotel development event for like the tri-state area of New York. Like we could get super niche and really deliver like a really specific audience for a specific event, like that example. And then, the next week we might do an event on, Midtown office, real estate in Midtown Manhattan. So like really, really super niche was kind of, like our belief is that there was riches and niches, and we could deliver like this really specific audience. So that was like part of the methodology. I'd say one other thing about it too is I think we learned pretty early on that if you're going to produce 300 events a year and publish 28 newsletters every single day, 5 to 6 days a week, it's all about systems and making it replicable, which initially we were terrible at. Initially, we would try to have like one smart person like me kind of just do everything. Like, I'd get the speakers, I'd figure out the contract with the hotel, I'd show up in, the morning and get all the chairs arranged. I'd even write some of the copy, I'd edit some of the copy. And initially that was the model. I kept trying to find like replicas of like our founders and people like myself, who could do kind of everything. And what I learned is that, most people are just like, they're not going to necessarily be that dynamic. And maybe it's that they don't, have enough equity. I don't know, but it was hard to get, these people. So I ended up studying this company called IIR that had hundreds of conferences, and figured out, oh, wow, they break it down into an assembly line. And so we basically had a programming department that gets all the speakers, a production department that handles all the coordinating and all the contracting and details and shows up and actually executes on the event. A marketing department that does all the constant email marketing. I mean, every day we're sending marketing about, hey, check out this speaker, you should sign up, cart abandonment, all the e-commerce stuff. And then the 4th department was sales. And then those 4 departments are supported by HR, technology, and accounting. And we invested really heavily too in like our CRM. And so just making this whole thing like this assembly line was really critical.
And talk a little bit about the systemization. So you just described kind of the buckets, but maybe walk through. There's a lot of people who run a business, and human capital is the solution to every problem, right? They just throw bodies at something, and for many people, especially kind of small business owners, they throw themselves at the problem. You were able to kind of at different points in that business build systems so that you didn't have to write every newsletter, do every sale, kind of all that stuff. But then also eventually on the transition, when you sold the business, you were able to step away from the business and not have to kind of continue running it. So talk a little bit just about like, how did you design the systems? And then what were the steps that it actually took to implement it?
Yeah, so I basically try to take everything that seemed hard to formulate and turn it into a formula. So, like for the writing, we created this like manual for like these are all the do's and don'ts, kind of like a design guideline. We speak in the first person. We write headlines that look like this. We write this many words typically. Our photos should never look like this, but they should look like this. And it definitely was far from perfect. It's not like I just handed this manual and people just instantly could write it like this. But over time, we managed to train people and then put in place a certain amount of management and culture that people could replicate the writing. And the same thing on the speaking. Like we're like, we need a certain percentage of the speakers to look like this and a certain percentage like this. And when we set up chairs in a ballroom, we never want them just to all be forward. We want them to be curved, or we want to be theater of the round. And so we basically break as many things down into formulas. I was really obsessed with like the sales processes because, man, it was a huge difference between a good salesperson and a mediocre one. And like a lot of them don't schedule the next meeting in the meeting. They just want to email the proposal instead of present the proposal because they're kind of, scared to talk about price and all these kinds of things that make a huge difference in conversion. And so we had to basically build training programs. And also I found that, people forget like 80% of what they learn in the training program when they join. So you basically need to have like a continuing education where you're just constantly every week getting people back together and teaching them and going into the field. And then another thing I think we learned eventually was hiring multiples of people at a time and hiring full-time recruiters. If you have a lot of great talent coming into the company, you can put pressure on the people that are in the company that they're replaceable, and that there's great talent coming up the pike, and that they have to keep improving and honing their skills. And also, it was a cool thing because then they would teach the people who were coming in, and people learn a lot through teaching. And so we built this whole kind of like apprenticeship program where each department was constantly bringing in new talent and training them, and we had 2 to 3 full-time recruiters who were just constantly hiring people. And the one other thing I learned was whenever I do something new myself as the CEO, I should never be doing it alone. I need to have like at least 2 to 3 people learning it with me as apprentices. And, one of those people is going to end up being outstanding. One will be kind of so-so, and one will probably have to let go within a year. And so I used to like hire one person at a time. I started trying to hire at least 3 at a time for any role. Especially when you're growing, if all 3 of them are amazing, great, you'll find a place for them. So I think some of those things were key. And yeah, that investing in getting off of spreadsheets and into a CRM was a huge thing. Like we not only put our sales in the CRM, we put all of our speakers and a lot of the people we wrote about and all the information about them, we were constantly adding to this like central database. And so the job got easier and easier. Like if you were trying to get a great speaker for like a podcast, we could just click a button and say, okay, who do we know that's real estate, that's hotel, that's in Los Angeles for this event? And we could just click a couple of buttons and get an email out to them. And so that made it a lot easier as we got scaled.
Yeah, and then these training programs, I think probably if you ask most entrepreneurs, what are they really bad at? It's like onboarding, training, and that continued education. You spent what seems almost like an inordinate amount of time, money, resources, mental energy on these kind of supporting actions of the system. So you got to design the system, you got to implement the system, and then like it's almost like garbage in, garbage out type scenario. So talk a little bit about those training programs that you set up. What were you guys optimizing for, and kind of how did those operate?
So every time we hired a new employee, we'd say, here's the existing manual, tear this thing up and make it better. Because in your first 90 days, you're going to learn the most, and you're going to see a lot of things that we don't even remember or see anymore. And so like every week you owe us a certain amount of track changes and updates to this manual. And it's great because new people are, like I said, they have fresh eyes. And so we were constantly refining. We had a manual for editorial. We had one for, producing the event, one for contracting the hotels, whatever it was. And then when people would join, we'd put them into like a 4 to 6 week program where we'd have someone in that department, and sometimes even myself for part of the time, or my COO, go in and actually train them. And then we'd bring them into the field, and actually we learned that just telling people things doesn't really work. They have to do it themselves. And so, the first weeks we'd get them to actually do a lot of this stuff, and then help and be corrective, and then eventually, once they got good, it was all about getting out of their way and like removing and just throwing resources at them. Here's more talent that we'll hire for you. Here's more money that we'll throw at your ideas. Because that was challenging. And I think also I learned that sometimes you have to allow like a department to do 70% as well as you might do yourself as the founder. Like there were definitely tons of times where I'm like, man, I think had I shown up at this event, I would have done the chairs this way. I would have gotten this speaker. Oh, I would have made this sale, 7,000 instead of 5,000. And I kind of had to let go of that in order for us to grow. And but that was challenging initially because I definitely was like, always wanting to like fix and optimize everything. And then other times people would way exceed my, they'd make like mistakes initially, and then they would learn, and then they would get way better than I could ever be. So I don't know. I don't know if that perfectly answers the question, but those are some of my observations.
Yeah, and then both of the businesses that you built, you did so with no outside funding. Talk a little bit, and I know you've got a whole bunch of thoughts on kind of venture capital versus bootstrapping, and maybe some of the fallacies that people fall victim to there. You kind of take us down that path however you want to, but just really comparing the venture route to one that doesn't involve outside capital.
Yeah, I mean, I've been kind of like an evangelist recently of trying to persuade more and more people that they don't need to pursue venture. I just, having worked at Summit, like you, I think we've both seen so many entrepreneurs in the venture space, and I just see a lot of them suffer from a tremendous amount of anxiety because they've got to keep hitting these growth numbers, because their only opportunity to make any real money besides their salary is to sell the company generally. And it usually takes like 7 to 12 years to get to the place where they actually sell. When I first went into it, I thought it was like a 5-year thing, but it's longer. And then, if they're losing money, which they often are because they're so focused on growth, the only place they can exit to is a strategic, because or going public, right? They can't sell to a private equity firm typically because they want profitable companies. They're not going to do a management buyout. They can't borrow debt against their company because it's not profitable typically. And most of them aren't big enough to go public. And strategics are kind of like, they kind of come and go. There might only be 3 or 4 of them, and they're kind of temperamental. It depends on their mood and their goals of that year. So I'm a huge fan of like, I think a lot of businesses could start off without venture. And so like my example for one example is pre-sales. You can sell some sort of product. So if you're like a subscription software product, go to your customers and say, look, I'm going to give the first 50 customers a lifetime membership where give us 3 years of what this product costs, and you'll get it for life. If you're like a membership, you can do something similar. I just spoke to like a manufacturing company, like an Amazon FBA sort of company, and they had a really cool approach. They went to some companies that would want to buy their product in a B2B sale and said, we'll give you exclusivity for your region so that your competition doesn't have our product. It was like a packaging product. And you're going to pay us an exclusivity fee. And then they used that fee to pay for the tooling and the initial prototyping of the product, and got them off the ground without any outside capital. And, one thing I love about this is if you sell a company for, 50 million without venture, like that's like the equivalent of selling your company for like 200, 300, 400 million with venture capital typically. And so you don't have to scale nearly as large. And so you don't have to focus on as much growth. And along the way, if you want, you can take distributions if you're profitable. And so, there were many years where we were making really nice money, like living off of distributions and salary, and still reinvesting millions of dollars into the business and growing it. And so I just found that we had a lot less stress in like years 4, 5, and 6 than a lot of my friends who are, have 200 employees, they're losing 10 million a year, bringing in 30 million, and they're just hoping and praying that like Salesforce acquires them, or whatever, Shopify buys them, or whatever it might be. So yeah, one other thing I'll say about that is I think part of that comes down to the ideas that you choose, the business ideas, if you're going to get started. For every market that you're interested in, that you're excited about, maybe you're excited about crypto or excited about, whatever it is, there's a continuum of like capital intensive businesses to capital light businesses. And I would suggest for many people, they start capital light and then, over time invest the profits from that capital light business. Maybe it's a consulting business or a service business initially. And as you're getting that cash flow, invest it into your product business and your more capital intensive business. Maybe you have to build a piece of software for 2 years before you can release it, but you start with having an agency that serves the same clients your software is going to serve. And so you essentially are able to, finance your business through this initial business model. So yeah, that's the kind of thinking that I'd love to spread more of.
And I think that as you do this like project selection or market selection, it's a huge determinant of whether you're going to be successful or not. And your point about based on what market you choose can determine a lot about, do you need tons of capital or can you kind of bootstrap and drive some cash flow? But one of the things that you've done over and over again is you take these like I call them highly ambitious, kind of pie in the sky, really dreams, right, or goals, and you're always able to pull it back to very rational plans and very kind of execution-driven plans. How do you think about being able to kind of context switch, right? So, hey, I want to go after this big market. Here's kind of the end goal or where I see this going, but then being able to kind of come back down to reality, if you will, and say, okay, here are the 10 things we need to do in the next 3 months in order to kind of keep going down the road that we're going down in order to get to that goal.
Yeah. So like one thing is I like the idea of not worrying too much about a massive total addressable market, instead thinking about a minimum viable market, just initially at least. So like, maybe I want to build, take the real estate example of BizNow. Like maybe we want to build the largest commercial real estate, news and media business. And maybe we even want to eventually get into software and do other things or buy a ski resort. But initially I just focused on, can I build a following and a profitable business in Washington, DC, and get everybody who cares about real estate in that one market to know who we are and buy our product, and then launch it to New York. And we did the same thing with Summit. We started with 19 founders, and then eventually we got, then it was 85 and then 140. And, our last event was over 3,000 people. And we took the cash flow from that and the know-how and the IP and the community that we built from that. And then we formed another joint venture and a separate LLC. And this is one thing I love to think about is how do you structure separate LLCs so that you can, if you don't want to dilute your initial company, you can still do ambitious new projects. So like, maybe you get like the Pomp brand going and you've got this, profitable engine, and you decide like, you want to build, I don't know, the Pomp hotel chain. And that appeals to all the kinds of people who, are into the Pomp brand. Well, you could start another joint venture with a private equity firm perhaps that funds it, and maybe a hotel development company, and license your brand to that other entity and control your brand through the license, get royalties for that. And maybe you even, raise money for the venture and take a significant piece if the venture does well in upside in the form of carried interest or promote. And so I think thinking about structure is super important. And at the same time, thinking about, how do you initially get some cash flow going in and a brand coming in, and how do you hire those first 5 employees? And one other thing I'll say is I was talking to an entrepreneur last week, and he was going to start like a new, kind of like a community for techies. And he was going to raise $1 million. And I asked him like, well, how do you know how to price this? He was going to charge like $300 for this product. And he was like, oh, it seems like the competition is like, this much. And so I'm going to charge, $300 to come in a little cheaper. And I was helping him, like, I think everyone should build their budget first. It doesn't really take a lot of time. Like if you just take a few bids on everything and you look at what like, your first employees are going to cost, what the product's going to cost, and then price it with margin above that budget. I think a lot of like early entrepreneurs, they just kind of throw out a random price. They don't really like back. I like to back into my price. so that I know instantly that if I sell one unit, it's a profitable unit. And if I'm going to sell it at a loss, then it's on purpose. It's not like, by accident. Um, so yeah, I don't know. Those are a few thoughts on that.
And so one of the things that you've talked about in the past, and I think just really nails it home, is like, what's the purpose of all of this, right? So the systems, the operational efficiency and excellence, the bootstrapping versus venture. Like, it's this idea that you've talked about where entrepreneurship gives you the freedom and it can alleviate a lot of the like financial anxiety or financial issues. Talk just like from a high level, somebody who's saying, I may want to go do this, but like, what's the purpose, right? Or how should I think about it? Because I think you've got a very kind of sober view of, you know, this is what this allows people to do. And some people want to optimize for that, some people don't, but maybe just describe that a little bit.
Yeah. So for me, I was, like a lot of people, not super happy working in banking and private equity, was, working these crazy hours and was, found it just not as rewarding as I was hoping. Like I was on this track that it was super appealing that everyone wanted to get into in college. And I finally arrived at Carlisle, it's one of the top PE firms. And I really wasn't that satisfied. I didn't see my family a lot. Couldn't pursue my hobbies anymore. Um, and I wasn't really working on something that I was super passionate about. And so I went down this entrepreneurial route. And what I discovered is that being an entrepreneur can also be super stressful and cause a ton of anxiety. You're trying to keep up with growth and you're multitasking and you're managing all these people all of a sudden. And so now looking back, I've been, I like this idea of like holistic entrepreneurship where, you're trying to solve for your well-being, and you're trying to solve for, real wealth, which to me is not just about getting rich, financially. It's also about gaining freedom, the freedom to self-express, the freedom to set your hours, the freedom to pursue, your interests and have time for family and friends, as well as your business and your team, the freedom to work with people that you love working with. And so I think entrepreneurship is this amazing vehicle for being able to achieve that sort of freedom. And I think, but the key is to avoid some of the traps of, growth at all costs. Growth can be like a cancer and it can kind of like eat you. So I think if you can structure things some of the ways I was discussing, you can have this like really fun and really enjoyable outcome as you go. And just like take it like in small little steps, bit by bit, and gain a tremendous amount of freedom, and also solve financial anxiety. I know I suffer and still do, but especially early on, from a lot of like insecure financial insecurity. Like, am I going to have enough to pay the bills as I'm building this business? Can I take care of my my family that I hope to have in the future, and retire, and all these questions that plague all of us. And so I was very focused on like trying to mitigate risk as I grew the business and try to ensure that we would have enough cash to, weather storms and things of that nature.
And so you've obviously spent the last number of years building businesses and done it at a very kind of high degree of success. You've been able to build really interesting communities that are not only full of successful, powerful, interesting people, but also can be quite profitable. But at kind of the heart, you started out wanting to do real estate investing. And so, talk a little bit about how you think about investor versus operator today. And you kind of merge them, it seems like, or there's like now more of a gray area because you literally own Powder Mountain and you guys are selling real estate there. But just talk a little bit about kind of capital allocator versus operator.
Yeah, I think there's a tremendous amount of power in being able to, if you really understand both. And I think a lot of startup people don't really understand private equity. A lot of private equity people don't really understand startups. And if you could sit at the intersection of those two things, then you can do some really powerful things. So, like an example I give is I'm really fascinated by Barry Sternlicht, who created Starwood Capital and Starwood Property Group, and hotels like the St. Regis and Hyatt and the One Hotel. And like just as an example, he'll buy, like he bought the Baccarat Crystal Company. Right? Have you heard of this company?
No, what is that?
So like there's this company that's been around forever. They make these like, crystal chandeliers, and I think they make like, silverware that's beautiful. And so he buys this company underneath this private equity firm. He takes the brand and he builds a hotel brand using the Baccarat name. So buying the crystal company in itself was a good buy. Like he bought it at a decent valuation. And then if you could grow that brand over time, as more and more consumers in places like China, are becoming middle and upper class, Baccarat's going to grow. But at the same time, he took that brand and did something new with it. So he launches a new vertical that's a hotel brand. And with his private equity fund, he funds the development of a new hotel in Midtown Manhattan with condo and hotel. And he joint ventures with the developer. So he puts up the capital for it from the fund. He licenses the brand from his Baccarat Crystal company that the fund owns. And he gets a developer who really is an expert in building, skyscrapers to actually build the hotel. And so he's playing in like all parts. He's making money on royalties. He's making money at Baccarat through the brand and the license. He's making money for the private equity fund on both the Baccarat company and the new hotel development. He's got a partner who's handling the day-to-day of building that hotel. So he's leveraging his human capital, so to speak, instead of having to build all that internally. And so he's kind of playing in all the different components of this. And so he's able to do that because he really understands like everything from brand and design and operation to also understanding capital markets and structuring. And I think that more and more people should learn how to do this. I think Virgin's another great example of being able to do that. And so I've been trying to apply things I learned at Carlyle and things I've learned as an operator and trying to sit at the intersection of these things. So Summit is a brand and has events, and Powder Mountain's a joint venture where we can, leverage that brand to be a developer, and we can use some of our hospitality expertise to improve the management of the mountain and make a better feel when you show up at a restaurant, for example. And then the brand of the mountain strengthens the brand of the Summit community and the Summit events, because more people hear about the mountain, more people want to come to the events. More people hear about the events, more people want to buy a piece of real estate at the mountain or just come out and ski. And so you're kind of starting to leverage all these different things. And so I think there's interesting ways to approach building businesses in this way.
Yeah, it's really interesting when you start to think about the importance of IP and using IP as an asset or a resource just as much as capital, human labor, or anything else, right?
Yeah, I mean, I like what you said in another show about Barstool and how they should have bought Penn Gaming, potentially. And I think it's smart, like you were saying, they could use their brand. They've got this huge following, and they could launch a new app for sports betting, the Barstool app with the infrastructure of a gambling organization, and leverage that brand to make money in a whole new way. In addition to having their all their multimedia platforms. So I think a lot of people could do this, like even on a small scale. Like I spoke to a guy recently who was manufacturing pickleball rackets and selling them on Amazon. And nice profitable company, doing $500,000 of profit. But it's competitive on Amazon. So he was growing, but it's hard to grow. There's more and more competition every day. But one thing he could do is launch, a league, for example. And he's got a following. People love the brand of his racket. So he's got an email list. So he could announce to them, hey, listen, we're now going to do this thing where it's, $50 a month. And we're going to meet once a week and we're going to have a tournament. And he could start to expand into like a totally different vertical. And, especially like that vertical, because it's kind of capital light. So it wouldn't need a lot of money to launch it. You could experiment and shut it down in 6 months if it doesn't work. And so, yeah, again, like leveraging your brand and your operational expertise to play. And you could, he could also do that in a separate LLC. He could joint venture with another entrepreneur. Like, let's say he doesn't have the time to build and manage a new company. Well, another way to go about it is he joint ventures with someone else, and they launch that and they run it. They've got skin in the game, and they pay him a royalty, or they give him 30% of the equity in the business. I think there's a lot of different ways to skin the cat.
Absolutely. And so I guess as part of this, you now are looking at kind of going out and finding brands to acquire and scale and grow. Maybe before we get to the types of things you're looking for, I know you and I have talked about a couple of different types of businesses and what you could do with them. So we'll play a game of what I'll call hypothetical private equity to kind of go through. Let's start first with Tony Robbins and his business. What would you do, and kind of how do you think that business could be improved?
Yeah, so I love Tony Robbins' business, and I went to my first Tony Robbins event last year. Super impressive, incredible business, huge following, diehard fans, and it's largely monetized through conferences or seminars, where thousands and thousands of people gather for 5 days and they learn a tremendous amount. And but one thing I noticed is they just kind of go home and they listen to free stuff that he puts out, and he provides coaching and some other services, and by the way, he runs an amazing business. But I think there's ways that you could take that and extend it, right? So one thing would be to build a monthly forum. There's YPO and Vistage and other companies. There's a company called Chief now in New York that's super successful, where you get people together in groups of 10. They meet once a month. Summit's actually producing this now, something like this called Junto. And you meet once a month, and you're basically a support group for one another to help each other achieve your goals, both personally and professionally. In the case of Tony Robbins, maybe even spiritually. And I think that could be a super sticky product. And his audience would, pay at least $5,000 a year for a product like that. YPO costs 10 to 20 grand. And I mean, these are like 30%, EBITDA margin businesses. For Vistage does over $100 million in profit sold to private equity. So that's like one extension that he could sell as people are leaving the seminar. From there, I've just been, one thing I've been really interested in is just, if you learn like 20 different monetization tactics, then you can kind of come up with infinite permutations of things you could do if you bought or started a company. And so, another thing he could do is build a lead gen business where he builds the best SEO, rated content on all things mental health. He's already kind of famous for that. He already has a lot of traffic to his website. So he could build, a huge amount of media on his site that covers every topic about mental well-being. And then people end up on those pages, and he could be an affiliate marketer where he's driving traffic to, different products around that space and taking, a cut through lead gen. He could build a premium subscription newsletter like you've done, of course. And an online community, kind of like Trends by The Hustle, where people meet in a private Facebook forum as part of that premium subscription, and share tips and share notes on how are they getting and managing life. I also think a cool way to extend his brand would be kind of like I was saying, he could build a private equity firm and buy other companies in the wellness space, and then leverage his huge following to promote those companies. He's also got just an amazing set of operators in his business that could drop into those companies and help improve operations, cut costs, whatever it need be. I thought one cool thing, I don't know if many people know this, did you know Jimmy Buffett has a real estate, division as well?
I did not.
So like Margaritaville, Buffett's company, not only does it, have like a radio station on, I think, XM Sirius, and of course, his concerts, but he started a senior living development brand where if you want to live the margarita style, lifestyle as a retiree, like, I'm sure there's, tons of people would love to live that lifestyle. You can move down to Florida and live in one of his senior developments and live in this like really cool culture. And so I think, Tony Robbins has this huge following, especially among baby boomers who, have a lot of disposable income, and they want to, visit wellness resorts and retreats and, maybe go to meditation centers around the world. And so I think you could build a kind of a hospitality brand as well. So yeah, I mean, I could go on and on with ideas for his company, but I think once you have a following like that and expertise, there's a lot you could do.
And it feels like really what you're talking about here is that following has bought into a way of thinking, a way of life, right? And they feel part of their identity is attached to that. And when you reach that point, you can apply it in so many different ways from a business perspective, right?
Yeah, I think someone smarter than me said, focus on psychographic instead of demographic. And we've certainly seen that with Summit. Like, we have people who are kind of like gray hair millennials, if you will, who are, 65 years old. But they, when Summit started, it was all people under 30. And now there's, all these incredible people who are, in their 60s, 70s even, who are kind of share the ethos, and they share the energy of wanting to create things and have an impact on the world, and other things that kind of appeal to the summit kind of psychology. And so, yeah, I think if you can focus on the psychographic of your audience, there's a lot that you can do with that, and you can kind of have more heavily into that psychographic, and get a lot more out of it, out of your following.
For sure. Another business that you've talked about is Media, which is different, but has some of the same elements as a Tony Robbins type business. What are the thoughts around something like a Media or media agency?
So, agencies are traditionally kind of like, they're challenging businesses. They're lower multiple businesses. They only grow through adding employees typically, because every time they get a new customer, they need more bodies to support the customer. And so, but it's a great business for bringing in cash flow. It's a great business for getting out your name, and they can scale very quickly. And they only, you don't have to like scale them ahead of your profitability. You can grow them as you get more clients. But if you want to transition an agency into a higher multiple business, there's one, you could come out with a product. And so like, Vayner could develop like a piece of software for social media. Maybe they should have been the next, they should have been Hootsuite. So they could, I'm sure, still come out with a great software product and just leverage their huge brand and following. But another thing they could do too is launch a venture fund. And, I think Hawk Media did this in LA, Eric Huberman's company, where, in addition to having this agency, they have access to so much deal flow. They're seeing so many problems that need to be solved, and they're helping so many startups. And so you could launch a venture fund with a group of, frankly, with a lot of your customers could be your investors. And then you could use that to make bets on the companies that you're servicing, and use this kind of unique perspective that you have. And then that just makes your clients even more kind of sticky, because, you've also become their investor. I also think you can make a private equity fund. Like, say you're an SEO agency and you help companies optimize how they show up on Google. Well, you have so much insight into, certain verticals and how to get the best SEO for those sites. You might as well buy those sites and roll them up. And if you roll them up and take them public, I mean, you could even take advantage of the public markets right now, where multiples for public companies are higher than private typically. And with SPACs and everything, so you could have an amazing outcome, rolling up blog sites. Let's say if you're an SEO specialist, or if you're an e-commerce agency, you could do this where you're rolling up e-com companies, like Thras is doing, and then actually provide them this service. Vista Partners is a good example. Like, they're this amazing private equity fund, and they buy enterprise software companies, but at the holding company they have a consultancy. And they drop that consultancy into the companies they buy and improve all their operations with their own. So they kind of have this like formula that they know is going to work before they buy the company. And so I think Vayner is super well positioned to do that. And they have so much expertise internally that, what company has 1,000 people internally like Vayner that's got all these experts that they could deploy and leverage. So yeah, I think, and then I also love events, obviously in a post-COVID world. I think Vayner could create a huge social media agency. I love how Salesforce launched Dreamforce. I used to be so jealous of, I'd go to Dreamforce and be like, you're kidding me. This software company is a more successful events company than my company. And I'm a full-time events company. Like, they've got, I forgot what it is. 50,000 people buying tickets, and, huge companies buying booths. And, that it's crazy that a software company owns that. And so I think that's, it's huge business. The trade show business is a very high multiple business. And I think Vayner could crush it in building like a social media trade show.
Yeah. And talk a little bit about how this changes for non-product companies, like creating products or buying product companies and then using them to kind of scale. So I think one of the disconnects is like, oh, if you're in the agency business, like then most people think you just have to stay in software, right? They don't understand. No, actually, and Gary's kind of done this a little bit, I think, in terms of he's bought some companies, right, and then try to use the expertise they have online to scale it. We see guys like Ty Lopez. I recently listened to him, Sam Parr, and Sean Puri talk through. Basically, he's just buying up Pier 1 Import, Stress Barn, whatever, and he's like, "Hey, I'm better at the internet than most people, and so I can market this stuff on the internet." Like, how do you think about that? meshing or intersection of these software businesses and skill sets with those physical products.
Yeah, I mean, I'm really, really excited to see if the Ty Lopez model, how that ends up playing out. But I think like if you have like a media brand and you've got a big following, I think like you said about Barstool, you can go buy, or I think you also said about Joe Rogan, like Joe Rogan could go buy a physical product that's sold on Amazon, sold through Shopify and e-commerce, and leverage his not only his following, but his like he's got this kind of like sticky diehard psychology around what he's built, and he could leverage that to promote a brand. I think someone who does this really, really well is Golden Hippo, Craig Clemens' company. They kind of fly under the radar, but they are this kind of like holding company that is behind a lot of direct-to-consumer brands. And their methodology is they find a guru, kind of an expert who's known in a space, usually like a doctor. And they find some famous doctor, the leading cardiologist who's like, worked on, Bill Clinton, and, everyone kind of knows this cardiologist. And then they find a product then in like, in the heart health space, maybe it's a vitamin, and they go and get that doctor, and they joint venture with the doctor, and they build the infrastructure to sell the product and do the customer service and build the freight formula. Maybe they buy an existing cardiology product that's already out there, and they use this famous brand, and then they spend a bunch of money on Facebook and build that brand even further. And they've absolutely killed it with this strategy. And they don't all work. I think they're almost like an incubator. Some of them fail, but the formula works. And so I think a lot of people could do. I mean, obviously, you see the Kardashians do this. Like anybody who's got a brand, I think could play in the e-com space, which of course is you're basically growing in the behind Amazon. As Amazon helps just expand the e-commerce universe. There's kind of this wind in your sails from all the amazing work that they're doing and Shopify's doing. So I think a lot of people could take advantage of that.
For sure. Whole Foods is a pretty interesting one. What are your thoughts there?
All right, well, this is my silliest one, but I've always wanted someone to create this. Like, I love what Walt Disney did with his brand. I mean, it's just insane. If you look back at what Walt Disney did, it's just so inspiring to take a cartoon brand and think, oh, I'm going to go buy thousands of acres, near Los Angeles and then, eventually in Florida, and build a theme park. And I think Disney's a great example of all these things. They bought companies, they spun up other brands, they leveraged their brand into all kinds of different things, cruise lines, et cetera. So Whole Foods, everyone trusts Whole Foods as like this amazing culinary brand, right? I think they could build Culinary World, where it's basically like a theme park, again, post-COVID, but, a theme park where, imagine the ad, like, come see how, 50,000 different kinds of food products and how they're made and experience this place. And I think it could be a huge tourist destination. The company that owns Italy created kind of a theme park in Italy that, most Americans aren't as familiar with. And it's like this really cool experiential theme park where there's just, tons of tour buses showing up every day with tourists who want to go see, how is mozzarella made? And, where does, how is beer brewed? And so you could imagine like a huge theme park like that. Maybe they put it in Orlando or outside of Vegas where there's already a lot of traffic, and make it an awesome culinary experience. And I think Whole Foods has got the brand to do it. I think other food brands could do it too. I love the newsletter business. I think they could also build a premium newsletter about nutrition and just, own that category. And every time you're, checking out, they give you a free subscription and get you kind of, into the brand, and then upsell you into paying them, whatever it is, $10 to $50 a month. And if you want to get nutritional updates, from there, they could do nutritional software.
Yeah, and it also feels like maybe Amazon is playing this game of like vertical integration. They just came out with a wearable, last couple of days that is going to track your health and fitness and all this kind of stuff. And like, I mean, it's not hard for them to immediately now start to hook that in with what food you should order, and then through Amazon Prime it gets delivered. Like you just start to put all the pieces together. It almost feels like some of the larger companies are doing this. Does that take away the opportunity for smaller companies, or is that just a sign that like there's so much opportunity that, whether you're large or small, it's kind of a green field?
I think there's just so much opportunity, and yeah, but I think that these are great companies to learn from. Their case studies are incredible, and especially we're lucky that they're public and we can see a fair bit of their numbers and see kind of dig behind the scenes and see what they're doing. But you're so right. There's this ecosystem effect as you build out more products. Apple is probably one of the greatest examples of this, where you get people kind of hooked on the services, they're hooked on the physical product. And so, there's this huge moat that you're building. Buffett says, buy moats, don't buy companies. Like, Apple has got this amazing moat. Amazon has this incredible moat. Salesforce is doing the same thing. They're buying all the companies that they can kind of channel right through their software, right through their sales team. And on top of it, they've got, like I mentioned, the trade show. And so, you turn to them for everything CRM. And next thing you know, they launch customer service, and, you're immediately going to look to them for that. And so, I think Oracle's done a great job of this too.
Talk a little bit about starting a company versus buying one. I know you've got some thoughts on acquisition and how that can be a great jumping point for kind of kickstarting something, and then also increasing the odds of success later.
Yeah, I think there's a space that, it's so kind of unknown and splintered that it doesn't even have a name that anyone can agree on. I started just calling it micro private equity, that I heard someone else say. And, I think it's in a really interesting space where I've been spending a lot of my time recently. There's all these companies out there that are like 300,000, or I'll even say 50,000 of profit to 2 or 3 million, that for the most part, the big PE shops or even the mid-market PE shops, they really can't spend their time on these. They just don't move the needle for a fund. But they do move the needle for an individual entrepreneur who's trying to make, $500,000, $1 million a year, $2 million a year. And some of them can grow, and I've seen friends grow them to $5 to $10 million of profit a year. And the space is highly splintered. And if you can become good at sourcing deals, it's the easy part is raising the capital. It's actually, there's a lot of capital, and plus the Small Business Administration lending makes it very easy to borrow money if you're willing to personally guarantee it. You can leverage up to, I think, 90% and take out a loan. And right now, you don't even have to pay interest, I don't think, for the first 6 months. And so, one nice thing about buying companies instead of starting them is you get the advantages of leverage. The power of leverage is as I know, like it's enormous. The returns that you can make on your capital when you only have to put in, 10 to 20% of the equity. And I think one thing a lot of people in the startup world don't really understand is joint venture waterfalls.
What is that? Explain that for people.
Yeah. So instead of thinking like pre-money, post-money, convertible note sort of startup methods of raising capital, the private equity world and the real estate world work in this concept of a waterfall. So I put in 10% of the equity needed. My investors put in 90%. After we each get our money back, I get 10% of every dollar out. They get 90% of every dollar out for the first dollars out, until we each get 100% of our money that we put in back into our pocket. Then we each get maybe an 8% return on that money. And after we've gotten our 8% return and our money back, then I, as the entrepreneur who did all the work, found the deal, put it together, worked in the company day to day, I then get a kicker. I get a sweetener. Maybe it's 20%, somewhere between probably 20 to 50% extra percentage of every remaining dollar of that business. And so if you buy a company and you hold it for 10 years, and you buy it for the 4 times multiple, in the first 3 to 5 years, depending on how much you grow the company, might even only be 2 years, you'll get everyone's capital back. And then for the next 5, 10 years, you might own 50% of that business, even though you only put in 10% of the equity. And so you're clipping 50% of the profit, plus you're paying yourself a salary. And if you're clever or ambitious about this, you can do this. You can do this a few times a year. You could buy a handful of companies and build a portfolio, spread the risk of you and your investors across multiple companies, and you could even put all that into a holding company, which then has enterprise value across all of these things. You could take the holding company public. So anyway, there's a lot of things you can do with structuring that. And I'll say one other thing about this is there's this concept that there are the largest generation in American history are the baby boomers. And they're retiring right now, right? Like my parents are 73 years old now. I'm 37. And I'm the first year of the millennials. I was born in 82. I think maybe I'm the second year. So over the next 10 years, tens of thousands of business owners who are baby boomers are retiring. And if they're running a small business, many of them can't sell their business to like a strategic or a PE shop because their business is too small, and they need an operator to take over the business. And private equity firms, they don't want to be operators, so they're not going to buy a business and step in and run it. So in order for these people to retire, they need an entrepreneur like us to come and buy it from them. And so there's a ton of opportunities now to buy these baby boomer businesses. And the other benefit is a lot of these boomers, they didn't really understand online marketing. So maybe they're running an HVAC business in Ohio, and they've had kind of a reputation with their customers for years, but they've got almost no presence on Facebook. And so you can buy this company, which has a great reputation, great employees, maybe even has a bunch of good surveys on Yelp, but they're not spending any money on Google AdWords. They're not investing in Facebook, and you can totally transform the marketing. So there's a lot of opportunity there, and I think it's an exciting space.
Talk a little bit about as you go out and you start looking at businesses to potentially acquire, what areas or industries do you think are interesting?
Well, I just mentioned one that's kind of interesting, the home services industry. Buffett and Munger, they love these kind of boring businesses that, aren't going to be disrupted overnight by new technology and are enduring. So yeah, home services, companies that install pools and fencing and roofing or do HVAC servicing are interesting businesses. Now, the downside of these businesses is that the challenge is the personnel. You got to take over and maintain personnel. But the upside is you don't have platform risk. If you buy like a e-commerce company on Amazon, there's always a risk that Amazon will just come out with their own competing product, or, a competitor from abroad will undercut you on pricing because they have cheaper labor. And so part of me kind of likes these boring offline businesses. But then I also really like, there's a lot of great online businesses. There's a number of companies right now rolling up kind of the FBA, the fulfillment by Amazon space, or the Shopify e-commerce space. Of course, software has always been a space that, PE shops love, but don't have the energy to buy the really small companies. So if you can buy small software companies, there's a couple of interesting companies that are kind of rolling that space up. There's this publicly traded company called Constellation, which is this amazing software company. It's kind of like the Berkshire Hathaway of software. And I think you could build a mini version of that, where you buy, there's so many, small kind of micros, they call them micro SaaS businesses out there. And you can buy them. And if you can buy them when they're small, when they trade for, 3 to 5 times earnings, and scale them up to where they're a little bit bigger, they trade for more like 8 to 15 times. Or if you can aggregate a handful of them together, and then your collective EBITDA is, as you approach 5-10 million of EBITDA, suddenly private equity firms want to buy you. And if you can get above 10, you could potentially even go public. And so there's a multiple arbitrage opportunity there where you're buying low multiple and scaling it into a higher multiple category. So yeah, those are some ones I've been kind of tinkering around looking at.
How do you think about talent in these businesses? So businesses that maybe are a little bit more antiquated, they haven't gotten kind of updated with technology, use of the internet. Traditionally, a lot of that's, in my experience, been the skill sets are different, right? So people kind of do what they know. And if you bring a bunch of young people in who are super savvy with the internet and technology, like they start trying to put technology everywhere, right? And do things differently. If you don't have people who are kind of up the curve on certain types of technologies, they just don't know what they don't know. And so therefore they kind of do it the way that they were taught, or that they've done it for their career. So how do you think about talent and kind of managing existing talent when you go in and buy a business versus kind of bringing in folks who have different skill sets?
Yeah, in my experience, you have to enter with a lot of humility. And if you're going to buy a business, you got to come in and spend the first 6 months just earning trust and leaving a lot of the things the way that they're doing it the same, and making only a few strategic changes. So like if you bought an HVAC business, you can update the marketing right away, because the people you have out in the field, a lot of times in HVAC, they get paid in part on commission for how many installations they make or how much they service. And so they definitely want more business. So if you could start by helping the people that you're employing win more business and earn more money, as opposed to immediately changing with like how they implement the business and how much data they need to enter day to day, the things that are going to annoy them about your new management style. So I would start with like, how can you actually help them earn more? and gain some of their trust. And then once they're kind of bought into the new, this a little bit of this new method, you say, hey, by the way, we're also now going to put in this new system where you have to enter some more data about, what happened on the visit and how many hours did it take you to install the thing, so that we can get better at, optimizing, how we put, labor out into the field in this example. So I think it's like kind of like a step-by-step, kind of gradual approach. And I think, one challenge is, if you're going to buy a portfolio, is like, how do you scale yourself? You're not going to be able to be intimately involved in every detail. And I think that's one of the amazing things when I watch like Buffett. Like, it's incredible how much, they don't meddle in the businesses. And so, one method is to be more hands-off and be more of a capital allocator and buy things and, leave management in place, or hire a GM while you're under LOI to come in and manage that business for you and just provide them the right incentives and culture, and which is a lot easier said than done. I'm like amazed when I see how, some of these companies like Constellation have done that. But yeah, I think it's a challenge and an opportunity around the human element of this.
Got it. And what do you think is the counter argument, right? So obviously there's a ton of opportunity, there's a ton of positives to taking the approaches that we've talked about, whether it's bootstrapping or acquiring businesses and scaling them. What's kind of the counter argument that people should be aware of, or the downsides and obstacles?
Well, look, for society, venture is amazing. What it's done for, the human race, if you will, right? Like, you're not going to put rockets into outer space and solve, major challenges globally without building billion-dollar unicorn companies. And so I think, just for societal reasons alone, we need people that are, building massive companies like a Whole Foods, like an Amazon, like a SpaceX or a Tesla that can deliver these new solutions and make huge innovative breakthroughs. Especially think about just like what's happened in developing drugs. You're not going to develop a breakthrough for COVID without spending, hundreds of millions or billions of dollars. So there's definitely a need for it societally. And then also some entrepreneurs, they want the adventure, they want the challenge, they want the moonshot of going and taking on a huge world challenge and solving it. And I think that's inspiring. I definitely, I watch, some of the people who have done this and just blown away by the things that they're doing. For me, I think I'm like too timid and too worried about failing and having that financial anxiety that we mentioned earlier. And so that's one reason that I kind of avoid this personally. But yeah, I think that's one thing, is just certain concepts are going to take a lot of capital.
For sure. And I guess as you kind of go through this, how do you suggest people getting in touch with, you mentioned earlier, like joint ventures and ways to get access to capital through private equity firms and stuff like that? Like, what's, in your opinion, some of the things that people should think through and should kind of be aware of as they approach those conversations in order to make it a win-win and really align incentives?
Well, I think that there's tons of capital out there chasing deals, and the thing that's in short supply are operators and deals, and fairly valued deals. And so, if you can bring yourself as a good operator, and if you can bring a deal, then you've really solved like a major challenge for investors who are trying to diversify and put out capital. And so, you're going to be in a really nice position. Like, you'll be able to get pretty good terms today, at least. It's kind of like an operators and kind of like a market. There's an opportunity to structure deals that are pretty favorable to the operator. But I think you really want to make it a win-win. You want to earn a good reputation so you can keep doing deals with your investors. And so I mentioned that joint venture waterfall concept. I think that's a really nice way of raising capital, because think about the proposition. Like, instead of me saying, look, I'm going to value this new concept at 10 million, at this random number, $10 million, and you guys are going to put in $1 million, and we're going to give you 10%. Instead, you can say, look, put in $1 million, and every dollar out initially you sweep, and you're going to get the first $1 million. And after you get your $1 million, I'm also going to give you this nice return. So at a minimum, like, you're kind of protected to make this 8% return. And then if things go well, and I'm really, doing what I said I could do, then I get the extra 20, 30, 40% of this deal only of the remaining capital thereafter. And so I personally just love that structure. I learned it from the real estate private equity world. This is super common. This is how like developers build, office buildings and apartment buildings and hotels, is they raise capital in this kind of joint venture waterfall. Um, Nothing wrong with the venture sort of methodology, pre-money, post-money. I find that like the argument is like a little bit harder to follow, because you kind of have to believe in this kind of valuation that's kind of hard to pencil.
Absolutely. And I guess as part of this, when you think of kind of where the world is going, the pandemic, the economic shock, the recession, the stimulus, the quantitative easing, like there's so much complexity in the world and so many moving parts. Do you see that as a opportunity, or do you see that as a something to kind of be very cautious of, and could potentially be a negative?
Well, I've certainly been cautious and not, taking too many. There's been a bunch of companies I looked at buying since around February, and I've been kind of following like the Buffetts of the world and kind of trying not to do too many things and being disciplined and kind of waiting for the right opportunity, because it was kind of hard to see where this was all going to shake out, and it's still hard to see from where I sit. Maybe we'll enter a recession next year, and the business I buy will, be down 30, 40, 50%. And especially so one thing would be to use less leverage in an environment like this. Don't put too much debt on the business and burden it. Raise a little extra capital at the outset, even if that means you dilute yourself a little more, whether that's starting a company or buying a company. So you've got some working capital sitting around. And then if you have the extra capital and a little bit of extra and less leverage, now you're in a great position. You've got a company, you've got some extra capital, and you can be aggressive, because this is a great time to be hiring people in the coming year. Talent is going to be less expensive. Really top talent that maybe you would have hired, they would have left you in 6 months for another great job, you're going to be able to maintain for longer. We built our businesses out of the recession in '08, and these were some of the advantages that were really helpful to us. The other thing was competition was kind of distracted. So like BizNow, we kind of came out under the radar when there were these big companies that were doing commercial real estate publishing and events. And in like '08, '09, they were so busy just cutting costs and dealing with challenges and raising capital to survive that they really weren't paying attention to us coming in and eating their lunch. And by the time they kind of woke up to what we were doing, we had a few 100,000 subscribers and a team and a great product. And so it was harder and harder to compete with us. And we ended up going from like kind of like the underdog to being kind of like the giant in the space. So I think if you've got, this is a great time to take advantage of those kinds of things.
Absolutely. And so I guess, how do you find the opportunities? Right? Like, I think that's another piece. People say, okay, great. You convinced me this is an awesome way to kind of build a business. I want to go do this. Where do I find them? Like, how do you normally think through finding either acquisition targets or markets to go look in?
All right. So I stole this from this venture capitalist, Paige Craig, who said something pretty brilliant. So he talks about hunting, trapping, farming, and trading. And I think I was kind of doing this naturally, but once he got this framework into my mind, I've like tripled down on it. So hunting. So hunting is cold outreach. So, you can network, you can, and you can also just do cold email campaigns. I mean, if you really want to get super sophisticated about it, you can build a team in like the Philippines that does outreach, and you can scrape LinkedIn. And there's a lot of clever ways to use technology now and software and outsourcing to build a huge lead gen pipeline for whatever niche it is that you're trying to buy companies in, or if you're trying to buy real estate or any other asset for that matter. Again, then second is trapping. So trapping is becoming known in a niche and becoming kind of like you are, like you're this known entity in a number of different business verticals. And so one way is to speak on podcasts like this. One way I love is host an event. Again, with COVID, you could do this over Zoom, but you'd be amazed how many people will just come together, even if you're a nobody initially. If you say, hey, I'm getting the founders together of a bunch of newsletter companies, and we're going to have a Zoom call where we all share notes. And so I do this all the time whenever I enter a new vertical. And I find tons of people will show up. I used to do it like in the back of a bar and serve drinks in Manhattan. And the way I would do it is I would have calls one-on-one with 5 or 6 people that I might have cold outreached or gotten a couple of warm introductions to. And once I had those 5 or 6 people and I earned some trust with them, I'd go back to them and say, hey, here's a list I created. I just emailed it to you. Can you pull this up? here's 50 names I think I saw you actually friends with them on LinkedIn. Would you mind introducing them to me so I can invite them to this like event that I'm going to host on Zoom or, at this bar? And you'd be amazed how many people will come together. And then you become kind of like the mayor of this space. You get up and give the toast, you make all the introductions. And so that puts you kind of in the center of the universe of deal flow. And then you let all those people know, hey, I'm looking to buy companies and this is what I'm up to. This is my thesis. So that's trapping. Number 3 is farming. Farming is basically just spreading love, like just helping lots of people. I especially love like helping lots of 20-something up-and-comers who are doing all kinds of cool, ambitious things and who are in a particular industry you're interested in. Maybe it's newsletters, for example, again. Just get to know all the, and just go and help them and give them free, help and advice. And eventually that starts to plant seeds with a lot of people that grow into trees and start to bring you deals. And then finally, trading, going to other people that are doing deals and saying, look, you're looking for software deals. I'm looking for information product deals. Every time I see a software deal, I'm going to send it your way. And every time you see this kind of deal, would you mind sending it my way? And people love this. And so like, just yesterday I sent like a software company to a guy who's rolling up software companies, and maybe he'll never send me something, or maybe a year from now he will. So if you do that with 50 people, it kind of adds up.
Absolutely. Co-founders versus no co-founders. You talked a little bit about kind of capital partners, but how do you think about this in terms of, is this a solo route to take, or is this something that's done more in partnership?
So I think that depends on the individual. Like there's definitely, getting a business partner, I think I underestimated initially, is like getting a spouse. It's a major commitment, and it's really hard to know up front if your business partners are going to be the 3 things like you want them to be, right? You want them to be high energy, high intelligence, and I'm speaking about intelligence broadly. Maybe they're have amazingly high EQ, and so they're awesome in sales. Or maybe they're really good IQ, and so they're really good with systems. And then third, you want them to be high integrity. And the challenge is it's really hard to know that until you work with somebody. You interview a bunch of people, you get to know them, even friends you start working with, and you learn, oh, they're actually a little lazier than I thought, or they're just not a good match, for my personality for whatever reason. One good thing is you'll grow a lot and trying to be a better partner to your business partners. And so you'll have to develop empathy and patience and things like that. But so I don't know, it kind of depends. There are days where I'm jealous of the Ted Turners of the world who just owned, all their business and had no partners. And there are other days where I was like, thank God I've got these partners. Like I would have never made that, that sale or thought of that, great idea. So, but yeah, I think to the extent I would say, Naval Ravikant talks about, look at the signals, like look at the actions of your partners more than what they say, especially when you're choosing a partner. And, it's really in the hard times you're going to find out if your partners are really who you thought they were, when you're running out of money, when you're making capital calls, when you've got to fire someone who's really hard to fire. Like, are they going to show up and treat you the way, and are you going to treat them like the way that you, kind of imagine that it might go down? So you can kind of look at the signals from their past, like look at their actions as best you can and kind of determine that. But yeah, and it can be amazingly fun having partners too. Like, they just bring it's fun to have someone at midnight to call and, gripe about your day with, or, it's just, it can be cathartic. So I don't know. It's a tough call on partners.
Absolutely. You're hyper productive in terms of you've done a lot. And before we go to wrap up with some rapid fire questions, talk a little bit about some of the hacks that you have on the productivity side that you've learned over the years in terms of really helping you focus on the highest priority things.
Yeah, so I think people spend way too much time in their inbox. And so I'm constantly telling my team, don't worry about being inbox zero. Like, ignore your emails. If you're going to read them, like Tim Ferriss's 4-Hour Work Week, said, like, bunch them up and read them at certain times a day, and scan them. I think people would be amazed how many emails they don't reply to just get resolved, especially when you have a team. Like, someone else just resolves it, or if you look back at your inbox. Well, one trick is look at your inbox 3 weeks ago. Like, go back 3 weeks and look at the things that were in there and see, like, did they really have to be answered or solved? A lot of times they're not urgent. So one trick for this is, whenever I'm done with a phone call, I'm on a lot of calls all day, my first thing is not to check my email. My first thing is to check my to-do list. because the to-do list really can move major action items forward that really move the needle. Whereas responding to an email, like most emails don't really move the needle a ton. Whereas like, hiring the next person, building that next big system, like those things could really make a huge kind of like, they leverage your time. I think if you have a team, every minute you can spend investing in your team instead of getting your own to-dos done creates leverage. If I can get like, a person, like 3 people on my team to understand the way I think about negotiating a contract instead of me doing the next contract, I struggle a lot with like my team and getting them to do this. As people become managers on my team, they want to keep doing the things that they were doing because it's going to be, they'll tell me it's faster. The person I'm managing isn't very good at doing this. So it'll just be a lot quicker if I get it done for them. And like, they have to like go and invest in that person so that, 6 months from now, they're never doing another one of those items again. And they're now innovating and doing the next item. So I know that that's really been hard for me to, kind of get out of my own way and do that sort of thing. But yeah, I would say, in general, sticking to your to-do list. Let's see what other things. Oh, another thing that I've found is if you don't spend like one late night a week, or maybe for some people, I'm a late person, but maybe it's an early riser. You got to get like an extra like 3, 4, 5 hours in sometime in the week at a minimum, whether it's on the weekend, early in the morning, or late at night, to kind of like get into the proactive stuff. Because you can very quickly just be in reaction mode all week and be super busy. And I find I make so much more progress if I put in like one extra chunk of time where I'm like, okay, that project I've been holding off on, I'm going to do, during this period. And then one last thing I'll say is do the hardest thing on your to-do list first. Like when you wake up, do the thing you most hate doing, that, get that out of the way. At least for me, maybe not for everyone. I find that's huge because I'll just avoid it all day. And one other thing I do too is I'll set an alarm for around 2 or 3 p.m. in the afternoon. And I'll the night before I make my top 5 list of the things I really were going to move the needle the next day. And when that alarm goes off, I check that list to see if I actually done this. And if I haven't, I'll cancel everything else that's happening the next like 2, 3 hours and just get those things done. And that way every day I don't miss, because a lot of times otherwise it's like, oh, I'll snooze it to the next day, the next day, the next day. And next thing you know, 3 weeks go by and you still haven't gotten done.
Yeah, it's so funny how humans all do the same thing, right? Like everything you're describing, people are going to be listening now. That yep, I do that. If I'm really intellectually honest with myself, I absolutely do that. And it's being aware of it, but also too intentional about putting yourself in a position to be better about it, right? And you don't have to be perfect 100% of the time, but just being in a position to be better and improve something can have a significant impact.
Yeah, totally. Oh, one last one. I really like, I think this is from Getting Things Done, this kind of famous book. Anything you can do in under like 2 or 3 minutes, just do it right away. Sometimes this annoys people on my team because I'll like, they'll bring up something and I'll just like pause and be like, can you give me a minute and get it done? And that's, so it's not always great if you're like in a team call or something. But otherwise, if someone sends you an email and you think it's something that's quick, I would just get it out of the way. And if you can't, if it's longer than that, put it on a to-do list and have it organized into some sort of bucket.
Sure.
But yeah, we're all, we all have like, a lot of us have the same bad habits. And so I'm always trying to kind of, fix those.
Before we get into the rapid fire to finish up, where can we send people to connect with you, find out more information, or send you deals that they think potentially would be interesting to you?
Yeah, if you just go to ryanbegelman.com, my name, it's Begelman, ryanbegelman.com, and you could subscribe there. And I'll occasionally send out some insights or share some info. And also, if you have a deal that's 300,000 a profit or more that you think I could acquire, would love to know about that. You can send me. You can find my email on my website, and you can also follow me on Twitter.
And I get 2 questions. I ask everybody, and then you could ask me one to finish up. What is the most important book that you've ever read?
Oh, easily Untethered Soul by Michael Singer. The most useful thing I've invested my energy into the last 20 years has been trying to become more mentally fit. And, I think a lot of people think it's just like woo-woo Buddhism and mindfulness, but man, there's like really hardcore, very real gains that you can make from, in the same way that Federer and Nadal are just better than every other tennis player, it's largely the mental game. Is the same as it can be applied to business or your relationships. Is becoming more patient, more focused, being able to. I really like this. If you get frustrated with something, how quickly can you switch from frustrated to being back at peace and like serenity and clear-headedness? And even like as a manager, I have to have a lot of endurance for decision making. I'll sometimes go, 6 calls in a row where I've got to make a decision, and I get tired of it. And so, like, you can build up mental endurance. And so, anyway, Michael Singer's book is a great place to start. It teaches you about how to develop awareness. And awareness is this muscle memory that you can use to see patterns and make huge gains. So I love that book. Yeah, that would probably that's my number one right there.
Untethered Soul. I haven't heard of that one. I'll have to go read that one for sure. Aliens, believer or non-believer?
Well, I definitely believe that there is advanced, beings somewhere out there in the vastness of our universe. I mean, so 100% believe that there's alien, life forms. Maybe it's simply bacteria, but my guess is there's also advanced life forms. I think it would be kind of sophomoric not to imagine that there's going to be, there's like something like a million times the number of grains of sand on Earth in the Milky Way alone. There's probably another rock that's pretty close to a sun that's got life forms. Now, whether or not they've visited our planet, if that's what you're asking, is a whole another matter. I don't know. It's fun to think that they're out there and that they're hanging out. One crazy thought is maybe they're among us right now and we just can't understand them. Like, to walk through the Amazon and pass an ant, and to imagine trying to explain to that ant, hey, we built the skyscraper over here in Manhattan. You wouldn't even be able to communicate with them. They might not even, be able to fully understand anything about your presence. And so I think when you think about artificial intelligence, super AI, like, there could be there could be advanced forms that are just like living on a different frequency than us or in a different multiverse so what does it mean to actually visit Earth, quote unquote, is like, I think in itself kind of complex. But yeah, if you're talking about like, the UFO landing in like a movie, I don't know. I'm going to guess that hasn't happened.
I've never thought of it as like, what if we're the aliens to the ants? Right? That's I've had a lot of people answer that question. I've never had anyone present it that way. That's a pretty good way to think about it.
Yeah. Well, there's this concept of Fermi's paradox, which is like, why haven't we seen other advanced life forms? And, it could be for any number of reasons. Maybe they always get wiped out because they kill each other. Maybe they're just too far away. They can't reach us. But yeah, one plausible concept is that they're they uploaded their information into like the server, and as they became advanced, and they're traveling through a frequency that's that we can't imagine, in the same way that we can't see radio signals, and they're among us in that way. Or we're living in a virtual reality that they created, and they're just outside of the video game that we're in.
That is awesome. You could ask me one question to finish up. What one question do you have for me?
Yeah, well, one thing is, what are one of the more interesting alien responses that you've gotten?
Yours is definitely one of them. No, I think most people fall into two categories. Either, yes, I believe the universe is so vast, like that type of stuff. Another is I don't believe because I've never seen them, and so show them to me and then I'll believe it. Are kind of like the two most common, but it's like heavily slanted, like 90% believe, 10% don't. I had an alien researcher come on one time, and I'm sorry, an ancient alien researcher, and he had a whole theory as to the extinction of the dinosaurs was actually driven by meteors that impacted the Earth and that caused, a change in the climate, all that kind of stuff. But everyone thinks it was a meteor that collided into the Earth. Instead, actually, it was alien spacecraft, and you can imagine the conversation from there. A guy named Bruce Fenton, and that one was pretty wild. I jokingly told a friend later I should have been drunk for that one so that I could like really let my mind, go and explore all the possibilities.
Yeah, that's an interesting one. I mean, there's a handful of people who believe that the Younger Dryas period that wiped out a bunch of civilization at like 11,000 years ago was caused by like a solar flare up that led to the magnetic field changing on Earth, and which the magnetic field protects us, I guess, from solar winds, and so that led to like huge lightning storms, and so that could have like wiped out, that could have clouded the Earth for a long period, and led to drought and all these interesting things. Maybe an alien caused the sun to flare up 11,000 years ago in some form. They set off a nuclear bomb on the sun.
Trust me, Bruce has probably thought about it. Awesome, Ryan. Listen, anyone who wants to get in contact with you, Ryan, Begelman, right? Begelman.com, or they can find you on Twitter. Any last parting words there, my friend?
Dude, I love listening to your show and reading your newsletters. So I really appreciate it. I think everyone should pay more and more attention to it. And also I've been watching you on YouTube now while I eat lunch. So I love how you're multi-platform. It's awesome.
All right. Thank you so much. We'll have to do this again in the future.
All right. Thanks. Talk to you soon.